In this presentation, we will record direct labor that we will apply out to jobs within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice problem, 1 job cost tracking work in process. We currently have our open windows open. You can open the open windows by selecting the view dropdown up top and the open windows list. Let's take a look at our objective by first considering this in Excel. So we'll look at it in Excel, see what we have to do in just a journal entry format and job cost sheet format, and then apply that to QuickBooks. So we have the direct labor paid, job 14, 15, and 16. Now note, when we think about direct labor, we might have to consider different options such as, are we paying payroll out of QuickBooks? Do we have a third-party payroll? Is this labor basically a 1099 type of format? We're not going to get into all the details of the different ways that people working on a job can be paid. However, just briefly note that we could be paying someone as a contractor, which would mean we're basically 1099ing them, and therefore we don't have to deal with things like the payroll taxes and the withholdings. That would be more of a straightforward type of transaction. We could be processing payroll through the QuickBooks system, in which case we would have to think about how we're going to apply the payroll transactions when we set up the payroll items. Where that could be a detailed, that could be a course in and of itself, how we're going to basically set up the payroll items within QuickBooks. There's different kind of ways that you could set that up. We might concentrate on that in the future. But, and then the third option is you might have a third party that basically runs payroll like ADP or Paychex. You take their reports and then you just need to simply enter their reporting numbers into your QuickBooks system in some way, shape, or form. And this will kind of line up to that type of format. So we're imagining we have a third party, QuickBooks or Paychex or Paychex or ADP doing our payroll. We're taking that, we're applying that out. We're going over basically the basic concept here of how we would enter this into the system. Our focus here is on the job cost system and not on setting up the payroll items within QuickBooks. Maybe we'll take a look at that at some future point, but that would require paid payroll over and above what's set up here. And so we want to keep this just in terms of the job cost system. So we have the 3 individuals, we have the direct material, well, the 3 jobs, and we're going to be applying out in essence, payroll to it. So what we're going to say is that the debit then is going to be going to work in process. So this will be the work in process account here. And then the credit is going to be going to, we're going to say cash. Now, if you think about the normal journal entry for payroll, if we took out all the withholdings and whatnot, again, we're not going to get into the withholdings, and you think about payroll as just a normal type of transaction, what happens? We're going to be paying somebody. That means cash is going to go down. The other side then would typically be some type of expense account down here. But this time we're paying people, and it's not going to an expense because we haven't consumed their work in order to generate revenue in the current time period, but rather we consumed their work in order to generate the asset that we're currently working on, the job, which we will later expense in the format of cost of goods sold. That's the key that you want to note. So whether you do that through payroll within QuickBooks or you have a contractor, same kind of concept with a contractor, that whatever format you're paying them should go into the job as you're paying them into work in process that we will then expense at the end of the job. So that's the concept that we want to keep in place here. So that's the key difference. We're not recording this to payroll expense or anything like that. We're debiting the job for the work that has been put in for the asset that has been created. The amount is going to be equal to the $30,000 plus the $68,000 for job 15 plus the $120,000 for all jobs. That's going to be the $218,000. We also need to record that $218,000 in the ledger, in the jobs report. But let's report this first. That means that the work in process is going to be going up by the $218,000. The cash is going to be going down by the $218,000. We now have work in process at $651,000, which needs also to be reflected by job. So now we're going to say, well, then job 14 got allocated to it the $30,000. Job 15 got allocated to it $68,000, and job 16 was allocated the $120,000. If we add up the total of all the jobs, that's going to be this. I'm holding down control and that for the 651. That's going to be all the jobs added up. That ties out to what's on our ledger supporting the ledger. So now we want to do that same type of process in QuickBooks. So now we're going to go to QuickBooks and do the same type of thing. If we go to the trial balance, then reports drop down, we're going to go then to the accounting and taxes and trial balance, changing the dates from 01/01/20, 12/31/20. There is our trial balance. What we would like to do is have the work in process go up, the checking account to go down. That could be done with a simple check. And we can use that check function to apply out to the job. So we're going to do a similar type of thing here. We're going to go to the Home tab. We're going to write a check, but now the check is actually serving its function because it will then be recording a decrease to the checking account. Now remember, this might be a payroll check that if you were processing payroll, you might do this through the payroll process. We're not going to get into the payroll. This is the conceptual framework depending on how you want to do the payroll. So we're going to go through here and say that this is going to be on the 12th. And the check amount total is going to be for the $218,000. And then we need to be on the items side, not the expense side. And then the item is what is going to be driving this. So the check itself means, of course, the checking account will be decreasing. The item, which is going to be direct labor, is going to record the other side of it. The other side, how do we know where it's going? Well, if we take a look at lists, the item lists, and we take a look at the direct labor, double clicking on it, the other side is going to that work in process account. So that's what the item is pointing to. Closing this back out, closing this back out. We're going to say that the item then, we're going to break this out by cost of first the $30,000 being applied to job 14, and then the direct labor, and that's going to be a cost of $68,000. That's going to be to job 15. And then we're going to say direct labor is going to be the $120,000 applied to job 16. So and obviously if we add those up, that's going to be the $218,000. So this journal entry then will be reducing or crediting the checking account, $218,000, increasing or debiting the work in process driven by the direct labor items by the 30, 68, and 120, or $218,000. And it will be applying them out in the sub job given the fact that we have our job fields, job 14, 15, and 16 in these amounts respectively. So we're going to say save and close, and let's take a look at that, see if it does indeed do what we would expect it to. If we go then to the trial balance, we can see then that the checking account has decreased. Double clicking the checking account, we see it's going down by that 218. Double clicking the 218, there's our check. Closing this back out, closing this back out. The other side then going to the work in progress. There's our work in progress. It's at the 651. That's what we wanted it to be. So that looks good. Double clicking on it, we'll see what is included within it. And that's going to include the breakout of the check, 14, 15, and 16. If we click on any of those items, we'll get to our check, which is going to be this amount of the 218. Closing this back out, closing this back out, the GL looks good. The trial balance look good. Let's take a look at the job reports now, the supporting documentation that should be supporting this $651,000. We're going to go to the reports drop down. We're going to go to the jobs and mileage. We're then going to go to the job versus the actual summary. And then we're looking at the cost data. Bottom line in the cost data, we have the $651,000 in the cost. Going back to the trial balance, we've got the $651 in the trial balance. That looks good. Back to the job data then. It's broken out, job 14, 171, 280, and the 200. Does that match our data on the Excel worksheet? We got the 171, 280, the 200. Those add up to the 651. Looks good. Let's check one individual job by going to the reports drop down. Let's go to the job and mileage, and let's go to the job estimate versus actual detailed report. This time checking job number 15 and say OK. We have direct labor, materials, and overhead in the cost column, 84,000, 188, and 8,000. And we have the 88, 188, 84, and 8,000 here for a total of 218. And that's going to match our 280. Yes, 280. And that matches here. So everything looks like it's working as it should.